Welcome back to another video. Today we're diving into our weekly update for the Bitcoin and cryptocurrency market. Today is Friday, April 5th, and we've definitely had a little bit of a market correction over the past week or so. As always, before we jump into the content for today, please make sure to smash the thumbs up button below if you enjoy the content. Hit that subscribe button as well. We're on the road to our first 1,000 subscribers. It would mean the world if you subscribed, and hit that bell notification icon so you can get updated every time we drop a new video. We're dropping multiple videos every single week, and you're going to want to get notified when they drop so you can stay on top of the rapidly evolving crypto landscape. So jumping into the weekly update, we can see first and foremost that we are currently sitting at a market cap of about 2.53 trillion for the overall crypto market cap. Bitcoin is slightly down on the week, down about 2.25% over the past 7 days. Ethereum down about 5%. And as we scroll down here, you can see that the vast majority of altcoins are down between 5 and 15% over the past 7 days. If we look at the overall crypto market cap, we did see a little bit of a drop over the past 7 days from about 2.63 trillion last Friday to about 2.53 trillion today, so about a 10 billion drop in overall market cap. Nothing too wild, but definitely a little bit of a correction as we approach the Bitcoin halving in less than 2 weeks' time. Fear and greed index, we're currently sitting at a fear and greed score of about 79, slightly down from last week where it was up above 81. Again, a lot of positive sentiment over the past couple of months, continuing to lead the fear and greed index to being above that kind of 75 to 80 mark over the past number of weeks. But, arguable how accurate the fear and greed index is now that we have huge amount of consistent inflows coming in from the new Bitcoin ETFs. As we can see, we were at a score of like between 75 and 84 at the peak of the last bull cycle. We've obviously put in new all-time highs with Bitcoin again before the halving this time around, but we definitely still have a long ways to go. So can that fear and greed index get up above 90 in the next 12 to 18 months? Let's wait and see. Looking at some of the biggest winners and losers over the past 7 days, we have Core in with a 115% increase, definitely the leader and the winner here by a long way. Some other mentionable gainers over the past 7 days, we've got Pendle in here. We've also got Mantle. We've got BitTensor DAO. We've got Jupiter, the decentralized exchange on Solana. We've got Near Protocol up almost 5%, and Ethereum Classic just breaking even. Definitely more losers than gainers this past week. In particular, we actually saw Wormhole just going live this past week as well, down 31% since launching about 48 hours ago. We have Flocky down 21%, along with some of the other meme coins. Dogecoin down about 17% as well. A few of the AI coins like Singularity Net and Fetch AI also down about 17 to 20% on the week. We've got Optimism, PancakeSwap, Algorand, Thorchain. A number of the other altcoins are down significantly on the week, so a lot of red in the streets over the past 7 days. We can see definitely a bit of a market correction has occurred as we approach the halving. And talking about the halving, yes, we are less than 2 weeks out from the Bitcoin halving, an event that takes place roughly once every 4 years, or at every 210,000 blocks. We're going to be seeing this halving event occurring around April 18th at 8 p.m. UTC. This is a moving target, but we are getting very, very close to the Bitcoin halving. If you're familiar with this channel and all the other videos that we've done, you will probably know that the Bitcoin halving leads us into a bull market. Typically, we see new Bitcoin all-time highs in the 12 to 18 months after the Bitcoin halving. This time around, we've put in new all-time highs prior to the halving for the first time ever. And it will be very interesting to see just how high we can go in the 12 to 18 months after this next Bitcoin halving event. Looking at the Bitcoin dominance chart, we are up on the Bitcoin dominance versus the rest of the crypto market cap over the past few days. We've seen a couple of bullish candles even in the past 48 hours, currently sitting at a Bitcoin market dominance of about 54.58%. We were only sitting about 53% this time last week. So definitely up on the week. And again, as we see continuous inflows with the new Bitcoin ETFs, it's going to be very interesting to see if Bitcoin dominance can continue over the course of the next few months in the aftermath of the halving, and if it can outperform some of the altcoins that would have traditionally outperformed Bitcoin in previous cycles. We were seeing a very clear uptrend since going all the way back to April, March of last year for Bitcoin being outperforming the altcoin market. So moving on to the altcoins, what we can see is that we've got an altcoin index score of about 39 for the past month. So definitely more of a Bitcoin month than an altcoin month, and the Bitcoin dominance kind of alluding to that. We've got the top 50 performers over the past month. Again, Core leading the way, up over 300% over the past month. Other notable mentions here, we've got meme coins like WIF up over 84%. We've got some of the larger caps like BNB and Solana who are up over 36 and 38% respectively. We've got ICP in there up over 40%. Litecoin is even up over 16%. Fetch and AVAX up about 10%. And then on the lower end of things here, again, given the corrections we've seen over the past week or so, we've got coins like Optimism, Arbitrum, Uniswap down about 29 to 34%. We've got Matic down 18%. We've got Injective down 15%. We've got VeChain down 13%. Link down 11%. Bitcoin itself is still up 4.1% over the past month, so still doing pretty well despite those recent pullbacks. Moving on to the crypto narratives over the past, this is not the past month, this is actually month to date. So we are looking at the top performing crypto narratives since the beginning of April. Now that we are 5 days into April, we can see that the narratives in general are underperforming. And we've got account abstractions, liquid staking derivatives, the Bitcoin narrative, privacy, NFTs, money markets, DeFi 2.0, layer 2s, layer 1s. Nothing is really performing amazingly in this first week of April, given the fact that we have had this market correction. However, if we zoom out and look at narrative performance year to date since the beginning of January this year, it's clear that the meme coins are definitely leading the way by far when it comes to outperforming the rest of the market. We've got real world assets that have performed pretty well since January also. We've got liquid staking derivatives, identity, artificial intelligence, the Bitcoin narrative, and account abstractions all performing significantly better than the rest of the narratives since January of this year. Moving on to the ETFs, what we're seeing is we've got continuous inflows in here with the 9 new Bitcoin spot ETFs, despite a number of Bitcoin continuing to be sold off by Grayscale Bitcoin Trust. We have seen significant outflows from Grayscale over the past week. Yes, the rest of the 9 ETFs are continuing to hoover up the outflows from Grayscale, but these outflows from Grayscale, as they continue to rebalance, are definitely contributing to the price pushing slightly lower over the past week or so. We are now seeing that BlackRock continue to be the largest accumulator of Bitcoin now, with over 259,000 Bitcoin accumulated in their iShares Bitcoin ETF since inception on January 10th. Fidelity are in second place with about 149,000. ARK Invest and Bitwise kind of in the mid-table here with about 43,000 and 32,000 respectively. And then on the lower end of things, we've got VanEck, Valkyrie, Invesco, Franklin Templeton, Wisdom Tree, and Hashdex. So if we look at inflows, net inflows over the course of the past 60 or so trading days since the ETF inceptions, we can see that the cumulative amount of Bitcoin that has been bought by the 9 new ETFs, excluding Grayscale, is currently sitting at about 513,000 Bitcoin in total. We have breached the 500,000 Bitcoin mark. Well over 2.5% of the entire Bitcoin supply has been purchased by the 9 new ETFs since inception about 60 trading days ago. This is phenomenal numbers. So obviously in the past week or two, we did see significant daily ETF outflows, negative numbers here in the week of March 19th to 22nd or the 24th here. Little bit better numbers in what we saw last week. Not so great numbers this week, but the number of net Bitcoin ETF flows continues to go up and to the right, even though we have seen some of those significant sell-offs from Grayscale. The good news is that those sell-offs from Grayscale, we are probably over the worst of them, and even if they were to continue those sell-offs for the next 60 days or so, there is only about 60 to 70 days worth of Bitcoin for Grayscale to dump based on the amount that they've been dumping on average so far, for them to have literally zero Bitcoin left in the Grayscale Bitcoin ETF. So the good news is that this dumpage can only probably continue and sustain itself for another 60 days or so before Grayscale is bled dry. And from there, we have seen consistent purchasing from BlackRock, from Fidelity, and the other ETFs, which will continue thereafter as we approach the halving and as we move past the halving with the upcoming halving event taking place in less than 2 weeks, as we know. Moving on to the cycle low multiple. Again, what we're looking at here is a brief overview of Bitcoin's performance in the lead up to and aftermath of the previous Bitcoin halvings and their respective cycles. So each cycle is denoted by an era with a different color. What we saw after the aftermath of the 2012 halving is denoted in blue, era 2 after the 2016 halving in orange, and era 3 after the 2020 halving in green. The red line represents our current trajectory for the current era or the current cycle. This day 0 in the middle of the graph here represents the halving date specifically, and as you can see, we are rapidly approaching the halving date. We did see better performance from Bitcoin in the in the lead up to this particular halving event, with Bitcoin putting in new all-time highs before the halving event for the very first time ever. It's arguable how much of a parabolic return we will see from Bitcoin in the aftermath of the halving, but if the ETF purchasing power continues, we will likely see some very good returns. The interesting trend to note here with every single era is that we're seeing those new all-time highs being put in by Bitcoin in those 12 to 18 months after the halving, and parabolic moves being made to the upside. Again, can we expect similar returns to what we saw in 2016 or in the aftermath of 2012? That remains to be seen. The pattern over the past 3 cycles has showed us somewhat diminishing returns in each of those eras. So can we sustain an anomaly to that pattern and see exponential returns? Or will we continue to see diminishing returns for Bitcoin this time around? Again, it'll be very interesting to see. And the final thing we're going to look at today is an update on tokenized treasuries. As we have seen in the past few weeks, BlackRock and Larry Fink have announced that they will be creating tokenized assets on the Ethereum blockchain moving forward, and Larry Fink has been on the record talking about how he believes the Bitcoin spot ETF is somewhat of a stepping stone for the tokenization of all assets on the blockchain over the next decade or so. And BlackRock have announced that they will be using the Ethereum blockchain for asset tokenization moving forward. We are starting to see assets being tokenized like US Treasuries. Real world assets like real estate will continue to be tokenized, and the market for asset tokenization on the blockchain is set to hit about $10 trillion by the year 2030. We are still in the very early stages of that, but as we can see, we have over $1 billion of tokenized US Treasuries already locked in on the blockchain here. Since inception, this is up over 1.2% in the past 7 days. This is something we're going to continue to track over the next number of months as we move through this next bull cycle. But obviously, zooming out and looking at the bigger picture, thinking about how the total value of tokenized treasuries and other tokenized assets on the blockchain continues to grow over the coming years, we can see that the vast majority is happening on Ethereum. We've got a lot of tokenized assets on Stellar, the XLM blockchain, and then small amounts on Solana and Canto as well. So we will be monitoring this over the coming months and the coming years to assess where capital is flowing and where assets are being tokenized on which specific chains. So as always, that is our weekly Bitcoin update. Definitely a little bit of a pullback in the past 7 days or so, but lots of exciting stuff going on as we approach the Bitcoin halving here in about 2 weeks' time. We have a lot of updates going on and a lot of stuff happening and due to happen in the 60 to 90 days after the halving, so worth keeping an eye on this space. We will be continuing to bring you content every single day on the channel, so make sure to smash that thumbs up button below if you enjoy the content. Make sure to hit subscribe so you can get notified when we drop new videos. As I said, we're dropping multiple videos every single week, so you're going to want to get notified when they drop so you can stay in the loop and hit your crypto goals. And as always, we will catch you in the next one.